Hello everyone. Why GIFT Nifty is indicating over 140 points gap up opening? Second, what happened in US market last night? All this we are going to discuss in a regular pre-market report video for today, 12th December 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about GIFT Nifty movement. Yesterday, at the time of Indian market close, GIFT Nifty traded at 26,000 mark. Last night, it increased all the way to 26,150 mark. But then today, early morning, it trimmed some of its gain and traded at 26,140. So, equating that for now, it's indicating the gap up opening of around 140 points. Why? All thanks to our Prime Minister Modi. Yesterday, he made this post on X.com that he had the telephonic conversation with US President Trump, and in that, they reviewed their bilateral relationship, international development, etc. and so on. I mean, we know Wednesday and Thursday, US Trade Department had the negotiation with the Indian counterpart. And at the end of the negotiation, yesterday, US Trade Representative released a statement that India offers the best ever offer, which itself is very positive. On top of that, as a response, our Commerce Minister Piyush Goyal said he welcomes that US is happy, and if so, he recommends the US to sign the trade deal. And following all this conversation, last night our Prime Minister Modi made the tweet. So this increased the US-India trade deal optimism. As a result, GIFT Nifty increased further. Please note here, as of now, Trump hasn't posted any post on his Truth social media as he was busy with the Trump Golden Card promotion, and also usually he posted around US night time, which is around our market opening. So please look out for any Trump post. If he posts like acknowledging what our Prime Minister said, then market might take that as further positive. If he differs, then market might give up its potential positivity. I mean, it's very funny. Nowadays, countries are running on the social media. Anyway, moving to US market. For the second session in a row, their market traded with the optimism because of the Fed interest rate cut and the Fed chairman positive comment about economy, inflation, and future interest rate projection. All this we discussed in detail in the last video. However, there was some weakness in the A-related stocks since Oracle said that they are increasing their capital expenditure projection very sharply for the A-related investment for the 2026 fiscal year, but they didn't give the clear explanation like how they are going to convert this massive A expenditure to revenue, which in turn made the stock to fall over 10% in one single session, which in turn pulled down the other A-rated stocks as well. So Nasdaq alone closed negative. On the other hand, S&P 500 scaled new all-time high value. Percentage-wise, Dow Jones was up by 1.34%, S&P 500 increased 0.21%, but Nasdaq fell 0.26%. In case of VIX, it fell by 6% and moved below 15. Then about oil, yesterday OPEC plus countries released their monthly report, and as per that, in the November month, they pumped 46 million barrels per day, and they project to continue to drill this 46 million barrels per day until the end of 2026, which is okay. But the same report projected the OPEC oil demand for the first quarter 2026 only like 42.6 million barrels per day. So they are going to produce more than the demand, which in turn reduced the oil price by 1%. At the time of this video, WTI crude trading at 58 US dollars per barrel and Brent crude closed at 61.5 US dollars per barrel. Then regarding Indian ADR, as it is, all the stocks closed very much mixed, and if we calculate the arbitrage, most of them indicating positive arbitrage, such as Infosys ADR, HDFC Bank ADR and Reliance GDR showing positive 1% difference, whereas ICICI Bank and Wipro showing no fresh movement. As a summary, despite Nasdaq closing negative, US market and global momentum is good. Hence, in line with that, Indian ADR and GIFT Nifty all indicating the gap up opening. Will it sustain? Only time has to say. Please remember to look out for Trump Truth social media post. One more thing, yesterday RBI eased the restriction on the credit and current account related norms for the Indian banks. So from the market perspective, this is ease of norms, so positive for banks, but that specific reaction was not visible in the banking ADR. Either way, we could say banking stocks will be on focus today. About institution, in the cash market for some reason, yesterday FII did only half of what their usual average trade value. But still, they were net sellers. They net sold for 2000 crore rupees. On the other hand, DA net bought for 3800 crore rupees. Moving to participant wise open interest analysis, yesterday index future open interest decreased to 2.8%, whereas on the index options, 3.1% call option open interest unwound and 21.5% new put option open interest were added. Because of massive put option open interest addition, the PCI ratio improved to 0.93 from 0.74. Then stance wise in the next option, client holding net 10.4% open interest favoring bullish position, whereas FI having net 7.6% of the open interest favoring bearish position, and property traders having net 2.3% favoring bearish position. In the index future, client having 68% of the open interest on the long side, whereas on the other hand, FI is holding massive 89% of the open interest on the short side, and the property traders having 59% on the long side. Then, as per stock open interest, Cholamandalam Finance, Muthoot Finance, Zydus Life Science, ICICI Bank, IOC, BPCL, GMR Airports, and Bharti Airtel are some of the 18 stocks that got an increased open interest along with a negative close, indicating the short build-up. On the other hand, Adani Green, HUL, Polycab, Motherson, Maruti, Trent, NHPC, and Sona BLW are some of the 83 stocks that got an increased open interest with a positive price close, which means these stocks indicating the long build-up. About the things to look out, during our market time at 12:30 p.m., UK GDP growth rate and Germany's consumer inflation are scheduled to release. After our market close, India's consumer inflation and Indian Bank's loan and deposit growth data are the important things to look out for. Coming technical, Nifty opened flat and after an initial volatility in the morning, it gained strength and was positive for the rest of the session. Then closed at near 25,900. Thus on the daily chart, Nifty formed a bullish candle with a lower shadow, indicating a positive trend and buying interest at lower level. However, it still remained below the short-term moving averages and the middle of the Bollinger Band, with RSI at around 50 but was still below the reference line. Hence, for the upside to continue from here, Nifty needs to surpass and sustain above 25,950 to 26,000 zone to move upward towards 26,200 to 26,300 level. Until then, it may consolidate with the immediate support at 25,700 followed by 25,500 as the crucial support level. In case of Bank Nifty, similar to Nifty, it also opened flat and after an initial volatility, it remained positive as the day progressed, then closed at 59,210. Thus, on the daily chart, Bank Nifty also formed a green candle with upper and lower shadow and it almost recovered the previous day's losses, indicating a positive trend. In addition, it climbed above the 20-day exponential moving average but remained below the 10-day exponential moving average at the middle of the Bollinger Band, with RSI increasing to 56 but could not surpass the reference line. Hence, going ahead, the zone of 58,900 to 58,800 could act as the crucial support. On the upside, the zone of 59,400 to 59,500 could act as an important hurdle. Regarding the options front, the maximum call option price was at 26,000 strike followed by 26,500 and 26,100, with maximum new call option rating at 26,350, 26,500 and 26,250 strike. Whereas on the put side, the maximum open interest was at 25,800 strike followed by 25,700 and 25,500, with the maximum new put option rating at 25,700, 25,800 and 25,900 strike. Thus, from options data, it's indicated that 26,000 is expected to remain a crucial hurdle for Nifty with support at 25,700. So that's all in this video. Hope you got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.